Welcome to Community CPA's 3 p.m. Tuesday webinar. And we're talking about something that is currently really has a lot of demand. Clients from all over the country has a lot of demand wanting us to do this ERC based on the update happened last Friday. Yes, last Friday. So there's so much going on the accounting and the tax side. Folks, you really want to do your due diligence, understand the ERC claim. And I don't know whether you have already done that, but if you have, you probably know that when you go to claim ERC and you talk to your ADP people or the payroll processors that you have out there, and they want you to sign this disclaimer, right? They want you to sign this waiver. So they said that, okay, you have already decided and you qualify for this. I'm just gonna do the amendment for you. So the 941 amendment is a piece of cake. It is not hard. What the hardest is to calculate your qualified wages and by the rules, right? And if you haven't really joined, if you have never joined our firm before, our webinars before, you of course don't know us and don't know me, but now you know, and we are the CPA firm that like to share knowledge. All right, disclaimer, of course, don't just take what people say and really study it. Be responsible for your own action. All right, so REC overview. Let's understand this. REC is, the full name of that is employer, oh, can you believe that I don't remember that? Retention, employee retention credit, okay? Employee retention credit. Credit just means that it is not exactly a deduction to income, it's a credit to taxes. It's reversing your tax. Of course, it is a refundable tax credit against certain employment taxes equal to 50% of qualified wages and the eligible employer pays to the employee after March 12, 2020, before September 30th, 2021. I already updated this slide. It used to say December 31st, 2021, but now we changed it because on Friday, the rule changed again, okay, changed. So now it ends on the third quarter, folks, and no more fourth quarter, okay? So we have the whole year of 2020, then we have the first 3 quarters of 2021. Eligible employers can get immediate access to the credit by reducing employment tax deposit they're otherwise required to make. Also, if the employer's employment tax deposit are not enough to cover the credit, the employer may get advance payment from IRS. What that means is, let's say if your 941 payment is only $5,000, but your credit you apply the credit is $8,000. If that is the case, then you get your the $5,000 you don't need to pay because it reverses that, right? Then the $3,000 the IRS give to you, but that is not like give to you for nothing. It is advance. What that means is you would have to pay $3,000 taxes, so they refund that to you, right? What if you go, well, I got ERC and I close tomorrow? Then if you overclaim, that could become a liability that they would, IRS would track on you, okay? So just remember that it is actually advance from IRS if you go over your tax limit, your tax deposit. And the ERC period, okay? Want to be really, really clear. ERC is not for before, not for after. It is just a special period from Q1 to Q4 of 2020 and Q1 to Q3 of 2021. All right. ERC eligibility, significant decline in quarterly gross receipt. Gross receipt, folks, not your net profit, not your cost of goods sold. It is your sales. It is your sales, the first number on your income tax return. So that need to decline. Decline by how much? In 2020, if you decline by 50%, we're talking about comparing to 2019, okay? So the first quarter of 2021, you qualify if your total sales, your gross receipt is 50% less than what you did in 2019, okay? In 2021, it's 20% less than what you did in 2019. Or, look at this, folks. It's not and, it's or. Or the government orders that fully or partially suspend business operation, like a restaurant, okay? Restaurant with carry out only. You cannot fill your seat more than 50% capacity. And many state government had put in that order, fully or partially. If, let's say you didn't drop, your gross receipt were pretty good, not 50% drop, but the government did order you to close or to reduce, partially suspend, then you did a very good carry out, you still made money, you qualify, okay? It's an or relationship. Now, for quarter 3, 2021, of course, this first 2 bullet points, we were talking about in the full year of 2020 and the first 2 quarters of 2021. And we add one more thing right here. This is new, folks. This is new. This is something that you have not heard of before. If you want, take a picture of the slides, and this is new. What it says is, for quarter 3, 2021 only, recovery startup business, it's called recovery startup business, says that if you started your business after February the 15th, 2020, remember in this case, the business never really had any ERC because you don't have anything to compare in 2019. So you were never qualified for anything like 2020 and 2021, the first 2 quarters. So, but if you set up your business on February on after February the 15th, 2020, your annual gross receipt is less than $1 million. No comparison whatsoever. Just saying that if it is below $1 million, you can claim ERC, and that credit is capped at $50,000 for the whole quarter. Got it? So eligibility, we're talking about who qualifies. So if you are a business started during the pandemic time and it just never really had a chance to claim ERC, and you don't even know what that is because you don't qualify, now wake up and you have a 3rd quarter you can do if your annual sales is less than $1 million. Of course, when we talk about ERC, it has to be you are paying salaries, okay? If you don't have any payroll expenses, your 941 is 0, we don't talk business. This is when people have employees. All right, so alternative quarter is such an important understanding, folks, you must have. So if 1 quarter eligible, if 1 quarter, let's say, I have an example right here. If quarter 1 of 2021, you qualified, your gross sales were 20% less than 2019 of your sale, your gross sales, you qualified. So you did ERC claim for the 1st quarter. Then your 2nd quarter of 2021 is automatically qualified. So this is what they called alternative quarter. If 1 quarter eligible, the next quarter is automatically eligible, okay? And the next quarter is not the following quarter. The next quarter means the immediate preceding quarter. Make sense? All right, so that is 2 pieces of information that really is a highlight for today. And I really hope that you digested that, you know what I'm talking about. Now, we talked about eligibility, right? So we talked about all of these information related to eligibility. And if you want to know what I talked about, go on to YouTube 24 hours later, it will be there. So now qualified wages. What is qualified wages? There's a lot of new things here too, okay? Qualified wages are capped at 10,000 per quarter per employee. So basically that means, you know, a quarter means 3 months, right? In 3 months time, if you paid that particular employee more than 10,000, your qualified wages is capped at 10,000. They don't count over 10,000. And you might be paying someone 10,000 a month. And you only capped at 10,000 for that entire quarter. All right. Then let's look at owner wages exclusion. This is a new, not new, but this is interpretation from IRS. You know, the federal government is complicated. And all of these things coming out of SBA. And then the government will, the IRS will come in to work the rules. And sometimes there are so many times the rule come out of IRS is totally different than what we thought SBA was saying. But that is, you know, the White House need to work it out. But right now, I want to make it really clear for everyone. This is new too. So new that a lot of people don't know. So new that people already filed the ERC that maybe wasn't doing it right, okay? And what happened if you did it wrong? If you did it wrong, you can file amendment, right? And I said that you just do amendment. That's what they want everybody to do. It's kind of a mess, but let's understand this, just in case you haven't really done it and you are in a good shape to do it right. So there is a concept called constructive ownership. This is an expanded concept of ownership. One come to ERC, if you are the owner, they want to say that you cannot be qualified. You cannot go into that wages, qualified wages. So the owner might be paying themselves a lot of money and you probably think, oh, wow, I can get qualified. No, you don't, because here they already come up with more detailed guidelines. They're saying that every owner in the company, for example, husband and wife each owns 50% of the company. Constructive ownership means that the husband owns 100%, the wife also owns 100%. Okay, so each family member owns the shares belonging to the business 100%. That just means that if you are belongs to a family and you pretty much out of the luck to be included in that qualified wage calculation. If the majority owner has a living family member inside of the company, and of course the owner is not qualified, also the family members are not qualified. There's so much of a controversial interpretation behind this, but I just, you know, I like to make things simple. So why don't we just say the owners and the families, extended family, including sister-in-law, you know, father-in-law, nobody qualifies because you have that relationship, okay? All right, so that's one thing, and feels like it's a blow to a lot of small businesses because maybe the payroll was only for the owner. In that case, right now, these new things come out already disqualified that part of wages to be inside of the qualified wage calculation. Now, exclusion of wages counted in the payroll cost for PPP forgiveness. That's a statement. You don't include wages in the qualified wages calculation. Don't include wages that is already paid by PPP. Okay, and remember, sometimes, you know, say our cover period for PPP is this 1 quarter, okay? And the last payroll for that quarter may be going into the following quarter, right? For the next immediate preceding quarter, it paid out over there. And then you want to make sure that you don't include that in your, when you do the qualified wages calculation, that cannot be included in there, even though it is paid into the period that is not covered by PPP, but your PPP coverage actually already covered that amount, even though it was paid outside of the coverage period. That's what I'm trying to explain to you. That I hope I got there, right? You got me. You understand what I was saying. Am I right? Because our payroll is always paid like 2 weeks after, right? 2 weeks after you got your paycheck for last 2 weeks. So if your covered period, including this period, that wages going out, that cash outflow cannot be counted as a qualified wages. Now, ERC credit, okay, coming back to ERC credit, that is 50% of qualified wages, and in 2021 is 70% of qualified wages. Okay, remember those ratio. And the non-refundable ERC credit. So there is a refundable portion and a non-refundable portion. It doesn't affect the total ERC, but appears on 940 and the 941 amendment. Okay, when you calculate the qualified wages, you got the number already. You know that how much you're going to get, right? So whether non-refundable or refundable, it does refundable, of course, you got the money, but the non-refundable ERC credit doesn't affect your total. So don't get tangled into that. Just know that portion should show up on the 941X. Q1 through Q4 of 2020 and Q1 to Q2 of 2021, the employer portion of the Social Security Medicare 6.2% is non-refundable. And what if you are saying that, okay, Ying, let's say my non-refundable is $2,000 and my total payment for that 941 was $5,000. So now I only can get $3,000. Am I right? You're right. You only can get $3,000, but you don't lose the other $2,000 because the IRS will advance you. Did you hear me? So you will get whatever you're supposed to get, but the IRS has a calculation to know that what is refundable, what is non-refundable. So you just need to do your form correctly. Q3, the employer portion of Medicare 1.45%, that's non-refundable. Okay, so if you do Q3, you need to know where to fill in that 941 amendment, or you need to do that right off the bat, right? And November 15 is the third quarter. And the folks, you still have chance to get that in without doing amendment. Just do the original 941 correctly. Then you got your credit. You don't need to pay that taxes, right? And then amendment of 2020, let me just make sure I didn't skip another slides here. Yeah, I'm good. So amendment of 2020 tax return. I know this is something, it came up from IRS guidelines, and it says that if 2020 ERC are claimed after filing the 2020 tax return, you need to amend 2020 tax return, because what happened is the money you got for the ERC refund, it actually reduces your payroll expenses in 2020. Then your payroll expenses already on your tax return. Shouldn't you be amending that? That's what IRS said. Amend your 2020 tax return. I think IRS will be flooded with the 2020 tax return amendment. So folks, if you're doing ERC credit on your own and with, for your 2020 right now, and make arrangement to get your 2020 tax return amended. Okay, and if you have someone who does your tax return, you need to let them know how much credit you get for which quarter. So the amendment should be fairly simple because they just reverse that credit from your payroll expense. So you actually end up with income taxes, more income, so you might end up paying income taxes. If you are a pass-through entity, and if you are 1120S and also 1065, I'm sorry, you have to amend your corporation tax return, then amend your personal. Doesn't sound very fun, but depends on how much of credit you get. So if you're getting $1,000 credit, maybe it's not worth it. But if you're getting $100,000 credit, I think that's the right thing to do, right? All right, so now time to come to summarize what I was saying. Okay, common mistake with ERC filing procedures. And this common mistake is not anything, you know, a lot of times when we get on speaking webinars to you, we really talk to you about our experience. These are the mistakes we see in the field. So it is a real mistake people make. And we hope that if we say it, will prevent at least some people to make that same mistake. Form 941X for eligible quarter, and it must be filed by the later of the two, okay? You need to file it timely. So the timeline is here, 3 years from the date you filed your original return, or 2 years from the date you paid the taxes. So most of our clients, I mean, if we file 941 for them, they pay taxes right away. So I've been telling my client that 2 years. So you have 2 years to do it. So let's say if we are amending Q1 2020 because of government shutdown, so we're amending that quarter because it starts from March 12, right? So we do that first quarter, then I actually do have 2 years time. 2 years to do that. So that will be this year, March, and next year, March, okay? The Form 941X need to be signed and mailed to the Internal Revenue Service, IRS. Please keep a copy of mailing and the postage. Why do I say postage? Because you really should have the date. And just in case your mail went in and God knows, you know, piling up somewhere for 2 years, and then you're running out of statutory limitation time, and then you go, no, I have proof that I mailed it early and don't know what happened at IRS. So that's the proof, right? And it could take up to 2 to 3 months for IRS to proceed the forms and they issue the refund, okay? So it does take time. So now let's, you know, my last slide is actually just to tell you how to contact us. And this is Catherine's email, and she helps to arrange people to meet our appropriate team members to get your 941X and or your eligibility study done. And make sure that you keep snap a picture of that. So right now, now we come back to, we just have a couple more minutes left, and I want to just roughly summarize it for you. You already know that 941 amendment, if you already filed 940 return, and you want to do ERC claim for particular quarter, your choices is to do 941X. That is amended return. And to get that return done, folks, it's not difficult. What is most difficult is to calculate your qualified wages. You want that to be calculated properly. Some of the softwares, the payroll companies, they came up with a report for you. But now you hear me talking about constructive ownership. You hear me talking about the third quarter where you can do this recovery new business claim, right? So those are not going to be in the software. And you have to figure out, you have to tell your payroll processor that to reduce your qualified wages because you have constructive ownership going on here. And or you need to you know, tell your payroll processor that although you didn't qualify for any other EIC before, but now there's a new things coming up, I'm qualified, I can do that. So make sure that you talk to them and making sure you file that one, you file that one return for your ERC credit. So I'm actually moving back to my slides. It's called Recovery Startup Business. Recovery Startup Business. That is the one that we want you to know for the third quarter. Is brand new, and the brand new just for the folks who did not have a chance for ERC claim. All right, thank you, folks. It was a really good session, and welcome the questions. Thank you.